I think the way, Kelsey, that students typically study accounting is by working problems. And I'm not sure that's the most efficient thing, but tell me, Linda, we have no problems to do in this class. So Linda, what's the equivalent of working problems? What's the commercial law equivalent of working problems? Because we have no problems to do. So for a student who studies by working problems, what advice do we give?
They're not studying the law.
So how do you, okay, that's nice, but tell me how to do that. Kayla, any suggestions about how to do this? How do you approach this class?
We create your own scenarios.
Okay, so my first advice is to form a group. And then, if you want problems to work, then create your own scenarios. In fact, Alex, what I'm going to do is form a group, you and Kobe. You've just made a new friend. How long have you known each other? Have you ever had a conversation?
Yeah.
Kobe's a really nice guy. You know? So and then maybe Megan can join the group, and then maybe Jody can join, and so now I'm going to group of 4. And what you could do is, Kayla, each one of them could write a scenario to share with the other 3. The other thing that you may want to do is to create a group, create scenarios to study by, and I think, if you think about that, Kelsey, that's, when you create your own scenarios, is that an active or passive activity? Active, and you learn much more than that. Now Kelsey, when one Googles, and I think Google is a great benefit to society, but sometimes when people Google things to avoid thinking about things. Does that make sense? Mm-hmm. So, and then when you take the CPA exam, we have. Yeah. Okay. So I'm afraid, Linda, I'm just not getting this. Also, Kayla, tell me what's the topic for today? Partnerships. So just pull up the notes for today. Now, is this the first lecture or the second lecture on partnerships? First one. Okay. So I need to find one. So I think, is this it? Partnership 1? But then also we need to do the CPA questions. And Kayla, what are the CPA questions? Agency 3? So that would be which one? That would be this one. So do I have the right questions now? Sometimes I don't have the right questions. But before we do that, let's finish up with the problem we left off last time. On page 654 is the reviewing the chapter from at the end of the second agency chapter. So page 654, Michael and Taylor, tell me what the facts are. So we have, you remember this, so we have a customer who's in a hurry, and the customer seems kind of snotty to me. The customer's in a hurry, and they open up a new cashier, and so she jumps ahead of the other people. That's not in the facts, but I think it's implied. And then she tells the cashier, hurry up, I'm in a hurry, and the cashier slows down. And then Taylor does an altercation, but it's not clear who struck the first blow, whether it was the unhappy, dissatisfied customer, or whether it was the slow cashier, who's apparently having a bad day. So, so anything you want to add to the facts there?
Meyer hit lots first. It's just not sure whether it was intentionally or an attempt to retrieve the charger or what they're trying to correct.
So Michael, just put the best spin we can on this. the best spin that we can on this is that the customer made the initial contact and then the cashier overreacted. Is that the best spin we can put on this, Timmy?
Can you repeat?
As I said, she overreacted. Now that's the best spin. The best spin is that the customer started the problem, and the customer kind of has a snooty attitude. But then customer's always right. You should. You know, it's too bad we don't have a camera on Sydney's face, because Sydney, you just made a. Stand up.
No.
Stand up and make that same face.
No.
Okay. Kelsey described the face. I said the customer's always right, and she looked like that. Like,
I rolled my eyes.
in a very dramatic fashion. Yeah, I saw you. So that's the best scenario. The worst scenario, Taylor, is that the cashier started it and assaulted the customer. Okay. Now, of course, who's suing who? Michael, we're gonna sue the cashier? She got no money. We're gonna sue, what's the name of the firm? Tell me. I've heard a name similar to that. Okay. So let's look at the questions. So question number 1, and read the questions for us, and Kelsey, give us the answer. Question number 1 on page 654. Kelsey, read the question and tell me the answer.
Under what doctrine discussed in this chapter might Weimar be held liable for the tort committed by Watts?
And that's a 2-word answer. The answer is
Respondent superior.
respondent superior, which in English means let the master answer for. Question number 2. Biju, read the question for me, and Brandon, give us the answer.
What is the key factor in determining whether Weimar is
So Brandon, the doctrine is respondent superior, let the master answer. And so whether the master, the employer, has to answer, what's the number 1 issue? Was she active within
The scope of
her employment? Question number 3. Linda, read the question.
How is Weimar's potential liability affected by whether Watts' behavior constituted an intentional tort or a tort of negligence?
So it seems like the cashier, if it's an assault, I don't see where the negligence is. So it seems like if the cashier committed an assault, which is an intentional, even under the best case scenario, where the customer started it, but then she overreacted. That seems to be intentional. How would we get, Greg, negligence? Who's arguably negligent? Not the cashier, but maybe the employer for hiring the cashier, the unstable cashier. But then, Greg, does it matter? No, it does not matter, because either way, either the firm, the store is liable for hiring an unstable person, or 2, the employee committed a tort. Candace, read question number 4.
Suppose that when Watts applied for the job at Weimar, she disclosed in her application that she had previously been convicted of felony assault and battery. Nevertheless, Weimar hired Watts as a cashier. How might this fact affect Weimar's liability for Watts' actions?
What do you say, Sydney?
Weimar would be considered more liable.
How can they be more liable?
Well, if they were considered liable before,
If they were not considered, are they more?
more likely to be considered liable.
What do you think, Linda? It seems like to me, if she's active within the scope of her employment, which she clearly is, and under Sydney's best case scenario, Sydney, I don't think likes the customer. Under the best case scenario, she was out of line. So Linda, why would the fact that they had knowledge that she is, I don't know, Sydney, does this suggest that she's unstable?
Yes.
So Linda and then Candace, how would that affect liability? And I'll give you a hint. Generally, we have two types of compensation. To make the person whole, which means that we would pay for medical bills and pain and suffering, but there also are damages designed to punish, and those are called punitive damages. Do you think, Linda, that it would be more likely that punitive damages, because, and the argument for punitive damages is that the conduct was so outrageous that it offends the conscience.
Yeah.
Do you think it would be easier to make that case
Yes.
if we had knowledge that she was unstable? What do you think, Candace?
Yeah.
Now, let me change the scenario. Let us suppose, Candace, let us suppose that the fight, and I think Michael, could we call this a fight? What was it? She was pulling her hair and
Grab her hair and hit it repeatedly.
what if this does not happen in the store, but happen in the parking lot? What if she followed, the cashier said, I'm gonna take a break. Instead of taking a break, which most people do, she followed the customer to the parking lot and then assaulted the customer there. What do you think, Brandon? Does that change the dynamics here?
Yeah, probably not within her scope of business to follow her out in the parking lot.
Then Walmart, Buymark is going to say, I almost said Walmart, Buymark or Target, the employer is going to say that she was not acting within the scope of employment. Clearly, when she's at the cash register, she's not acting within the scope of her employment. But she follows the customer into the parking lot, then arguably that's outside the scope of her employment. Linda, if you were the plaintiff, what would you say to that?
That,
It's your parking lot.
yeah.
So let me change it again. But before I change it again, Kelsey, you agreed that that weakens the plaintiff's case. So what happens if it doesn't happen that day? But what happens if it happens 2 days later, and they're not at the Buymark, they're at, I don't know, Target, 2 days later? Now, Kelsey, what does that do to liability?
Definitely not within the scope of employment, so Buymark can't be held liable for it.
We can try that. And ultimately, Sydney, this would be a question to be decided by a jury. But it seems like Kobe, you'd have to really stretch to get a connection between Buymark and the action here. And Michael, is this person just basically unstable? Probably a history major. What do you think, AJ? Michael says no. You like history majors?
I don't see the purpose.
Those that don't know history are doomed to repeat it. You don't see the purpose of history? Somehow we failed on our liberal arts mission. But that's okay. Question number 1. Now, Linda, have I got the right questions?
Looks like we did.
Oh, very good. So Candace, under agency law, which of the following statements best describes ratification? Candace, tell me what ratification is.
Like the agreements that like, basically like the second party.
So, Lainey, tell me when the issue of ratification comes up.
When an agent does something that exceeds their authority.
So the agent exceeds her authority, and then the principal who could say, I want nothing to do with this, comes in and says, I ratify, I accept the agent's action. So now I know what ratification is. A principal's affirmation of an agent's authorized act. But Candace, if the act is authorized, we don't need ratification. B, delineate a principal's affirmation of agent's unauthorized act. I think that's what you just said. Or C, a principal's approval in advance. Well, Candace, how can you ratify something that's not yet happened? Or a principal's disavowal. Well, Candace, that makes no sense. How can, I mean, this is the language itself. I show my disapproval by ratification. So therefore, Talini, the answer is B as in boy. Question number 2, math. Which following statements represents a principal's duty to an agent? So yes, and Matt, you'll see that CPA exam often has these types of questions. The principal is required to maintain permanent records, account to the agent, and pay the agent within the terms of the agreement. Matt, does she have that obligation? Michael, the principal is required to reimburse the agent for all authorized expenses incurred unless the agreement says otherwise. Does the principal have that duty? Therefore, Matt, the answer to both is true, so the answer to the question is
C.
C is in Charlie. Question 3. Oh, 4. 3. And under the agent's duty to account, which of the following acts must a gratuitous agent perform? First of all, what does that mean? Gratuitous agent. David? Agent who acts for no pay. Now, David, does that fundamentally change? And David, do you think that comes up often?
Yes.
Not within a business setting, but do you think it comes up often in a family setting or between friends? Or you simply will be, Katie has to be out of town because she's going to, I don't know, regional something or other. And then she'll appoint you as her agent to take care of a matter where she's out of town. You're doing this for free because you're her friend. But does that fundamentally change your duties? So, are you required to commingle funds? In fact, that's one of the things that you absolutely cannot do. And, David, if you want to lose your CPA license quickly, do that. Or account for the principal's property. David?
Yes.
So, commingle funds, no. Answer for the principal's property, and Katie, that's reasonable. Even if you're not paying him, you expect him to safeguard your property. And so, for example, suppose that Katie, you appoint him as your agent to sell your car. He should at least make sure the car is kept in one piece. So therefore, David's answer is C, as in Charlie. Excellent. Question 4. Greg, Young Corporation hired Wilson as a sales representative for 6 months at a salary of $5,000 per month plus 6% of the sales. Which of the following statements is correct? A, Young does not have the power to dismiss Wilson during the 6-month period. Greg, let me put a question mark there. B, Wilson was obligated to act solely in Young's interest in matters concerning Young's business. Megan, is B true?
That's the answer.
C, the agreement between Young and Wilson is not enforceable unless it is in writing. And tell me, Greg, is this a matter of agency law, or is this a matter of common law statute of frauds?
Common law.
And under statute of frauds, is there anything here that would indicate this should be in writing? Is not to sell the good, it's not to sell real estate, and it's only for 6 months, so it cannot be greater than a year. Therefore, does this have to be in writing?
No.
Or Megan, the agreement between Young and Wilson formed an agency coupled with an interest. No. So therefore, the answer is A or B. And Megan, I don't particularly like this question because I kind of think A is a good answer, which is why I chose this question. I think A is a good answer, but Megan, is B a better answer? Therefore, the answer is B. B is in boy. Question number 5. AJ, which of the following is prerequisite for the creation of an agency relationship? Consideration must be given. Well, AJ, we just had an example where David agreed to represent Katie for free, so that's not correct. Taylor, the agent must have capacity. No, it's not the agent, it's the principal. And Taylor, that's because the contract is in whose name? The name of the principal. So B is not correct. AJ, C is correct. And then AJ, they seem to have this thing about stuff being in writing. The agency agreement must be in writing. The answer is no. So therefore, AJ, the answer is C is in Charlie. Taylor, you agree?
Yes.
Question number 6. Principal and agent relationship requires a, Brandon, there's that written agreement. There's 3 questions in a row it has a written agreement, so we can reject that. B, power of attorney. Alex, a power of attorney is a special kind of relationship, a special kind of agency relationship, but is it true of, so a power of attorney is an agency relationship. Does it then follow that all agency relationships are powers of attorney? So I can reject that. Meeting of the minds and consent to act are specified consideration. Well, Alex, we just looked at an example a minute ago where there was no consideration, so therefore the answer is
C.
C. Excellent. So, thank you for returning the question. Okay. Notice, Michael, that we did agency before we did partnership, and because in a partnership, if you and Kobe in a partnership, you're mutual agents for each other and for the partnership. So agency concepts and partnership law, partnerships are governed by common law and statutory law, primarily the Uniform Partnership Act. Partners are agents and fiduciaries of each other. Uniform Partnership Act, in the absence of a partnership agreement, the UPA, as adopted by most states, including Missouri, covers the partnership. So let me make sure I understand this. Michael, you and Kobe form a partnership. You can agree to whatever you want to agree to. How to split profits, how to split losses, who has the right to do this, who has the right to do that. And so the provisions that we're talking about are absent a partnership agreement. Absent a partnership agreement, then we would apply the conditions of the UPA. But Alex, we can always by agreement overcome that. Now Alex, this agreement does not have to be in writing unless it's to involve in real estate, it'll last more than a year and so forth. So it doesn't have to be in writing, but Megan, should it be in writing?
Yeah.
Why?
So you're protected whenever the other person.
So protection against the other party. Also, Candace, even people of goodwill, and you'd be surprising how many people are not of goodwill, even people of goodwill may have different memories of what we'd agree to. And therefore, it's good to have something in writing. And, Alex, should the partnership agreement be as detailed as possible? I think up to a point, but then we don't want, I'm a big fan of the Big Bang Theory. And Shelton's partnership roommate agreement is like 100 pages. That's probably excessive. Imagine what he would do with a partnership. UPA defines a partnership as an association of 2 or more persons to carry on a business for profit. Partnership presumed under UPA. So Alex, even if so you have an association with Linda, even if you don't call your association a partnership, it could be considered a partnership if there's a sharing of profits and losses, if there's joint ownership of business properties, if there's an equal right to be involved in the management of the business. Then even if you don't call it a partnership, it would be presumed to be a partnership. But Megan, that's a good reason that this should be in writing so that we there's no uncertainty. No partnership or profits were received as a payment for a debt, wages, or services of an independent contractor, renter, or landlord. So the fact that Linda Ellis is letting you share in her profits from the business to satisfy a debt doesn't put you in partnership with her. It just means that, Linda, you're satisfying a debt. No partnership or profits were received as a payment for an annuity to surviving spouse or representative of a deceased partner. And Kelsey, if you think about that, if you're in partnership with Keith Harrison, I started to say Sydney, but then,
We're gonna kill them all.
yeah. So if you're in partnership with Keith Harrison, there are certain, you know Harrison, and you know that he's a good guy to work with, but he's also old, which means eventually, probably within the next couple of weeks, will die. And then the interest will pass to his wife, who you don't know, or maybe you do know and you don't want to deal with her. So the fact that the partnership is going to buy out his interest by paying his spouse or his children doesn't make her your partner. Several business or business goodwill. Basic partnership concepts, two different partnership theories. Equity, entity theory, the partnership is a standalone entity, and that's the theory that's used in law most of the case, and most of the time. Conduit, well, the partnership, it only serves as an extension of the individual partners, and that's the theory that's used in tax most of the time. However, Sydney, you remember in advanced tax, when we talked about partnership, Sydney, you remember I said one of the things that makes partnership taxation so difficult is because it's got a split personality. Sometimes, for example, at formation, we treat it as an entity. In fact, if you think about it, Alex, to form something, it has to exist. But then, Sydney, when we talked about who's going to pay tax on the profit or loss, then it's not the partnership, it's the partners, and so therefore it's the conduit theory. So AJ, both law and tax use the terms, use both theories, but usually, in most cases, the law sees the entity as existing in and of itself. Certainly, in most cases, the tax sees as basically a conduit, as a channel to provide information. Remember that the basic balance sheet equation is assets equal liabilities plus owner's equity. And Michael, you will remember that from basic accounting. Corporation, we expand this to assets equal liabilities plus contributed capital plus retained earnings. So we say that, Kayla, that with a corporation, we have two components of owner's equity, amount that is contributed by the shareholders, and then the profit which has been retained by the business. But then in a partnership, Kayla, we can expand it again. In a sense, we expand it, but in another sense, we contract it, because we basically have assets equal liabilities plus, Kayla, your capital, plus Linda, your capital. So basically, in your capital account, Kayla, we merge your contribution and your share of profits together. So in a sense, Linda, we separate it out because we have a separate account for each partner. And Brandon, if we had 100 partners, we would have 100 capital accounts. But within that capital account, Candace, we would have both your contribution to capital, what you put in to buy into the partnership, plus your share of the business profits. While in the corporation, we keep it separated. Here we... Let me ask a question. And I think I know the answer to this, but I'll ask the question anyway. At any point in your, Kelsey, in your academic career here, have you ever talked about partnership accounting outside of the tax class?
Nope. Well, we talked about partnership, just the business form, but not actually accounting for it.
Did
outside
you
of
notice that in your advanced accounting textbook, there's a chapter on partnerships that you don't do?
Not-
Should we? I don't know. What do you think? Should we?
I mean, it kind of depends on how the students we think are going to go on to deal with just partnerships versus larger corporations.
But then Cindy, we also talked in advanced tax, talked about maybe it's enough to do it within a tax context. I know. Okay. Matt and Linda began a business when Matt contributed $99,000 and Linda contributed $1,000. Do a simple, what's the capital account of each partner? Well, Linda, your capital account is
1,000.
$1,000, and Matt, your capital account is?
99,000.
Matt, could you and Linda be equal partners?
Good.
It seems like that you're contributing the majority of the assets. So Linda, how could you be an equal partner? Maybe. Maybe your contribution is not monetary. Maybe your contribution is your time or your expertise. And maybe, Matt, you're willing to give her an equal share because of what she brings to the partnership. So, in other words, Matt, you're the money person and she's the person who's going to run the business. Of course, now, I asked Linda if you could be equal partners, and the answer is you could. In fact, Linda, could you be a majority partner? Sure. Whatever you agree to. However, and how do you, Matt, how should you split profits and losses?
Good question.
What are you going to suggest?
I mean, since I put the majority of the money, I feel like
Well, 99 to 1. And Linda, you're going to say,
50/50.
I was going to say 70-30 because of your expertise. But you can do it however you want to do it. But David, yes, suppose the partnership agreement does not specify how they will split profits. Yes, suppose the partnership agreement does not specify how they will split profits. And I think, Megan, that's a fundamental mistake, isn't it? Because isn't that something that should be discussed? But if it's not discussed, if it's not agreed to, the EPA says it will be split 50-50, be split equally. Which I think, Linda, is what you asked for in the first place, and Matt? Okay. Now let's continue. And the partnership is silent about how to allocate profits and losses. Megan correctly told us that EPA says 50-50. After the first year of operation, the partnership had a profit of $10,000 and Matt withdrew $5,000 from his partnership account. What is the balance of the capital accounts of the two partners? So Linda, you started off with a capital account of $1,000. And then your share of the profit would be $5.
Yeah.
Your share of the profit would be $5, so your capital account is now $6. Matt, you started off with a capital account of $99. You took out $5. That was your withdrawal. And then your share of the profit would be
94.
$5, and therefore your capital account is now $99. Linda, why don't I ask for a complete balance sheet? Next time when we talk about partnership liquidation, we're actually going to do an ending balance sheet to see who gets what money at the end. But why don't I ask for, Katie, why don't I ask for a complete balance sheet now?
You haven't really done anything else with the assets, you're just trying to look at the capital.
Well, okay. Megan, if we have made a profit of $10,000, that means that we have bought and sold something. But Katie, would that distract from the point I'm trying to make, which I don't really care what's going on the asset side. Also, Megan, we may have incurred some liabilities. But Megan, I'm primarily concerned in this example with what happens to the capital account. So I could do, in fact, and Katie, I thought about doing a complete balance sheet, but then I decided that would get more messy and it would distract from my point. Good decision?
Yeah.
Very good. Okay. Angela, you got that on tape. Everybody agrees. Partnership formation and operation. Partnership agreement can be written or oral, but as Megan says, it should be written, just to protect us, unless the statute of frauds requires a written agreement. And Alex, when would it require a written agreement? If it's more than a year, if it's involving real estate, or it's involving goods, more than $500. Duration of the partnership is for a particular term. So Linda, you and Kayla decide to go into business together for 3 years. Or it could be a partnership at will. Linda, which means what?
There's a specified time of when it's gonna end.
Which means that you either one of you could end it at any time. Okay. Partnership by estoppel occurs when a person who's not a partner holds himself out to third parties, and the third party relies to her detriment. The non-partner is an agent whose acts are binding on the partnership. So therefore, Talini, if Kelsey represents herself as a partner in the XYZ partnership, even though she's not, but she has apparent authority, the partnership will be stopped, will be prevented from denying that she's a partner. But Kelsey, that's true as long as her reliance is reasonable. So if she comes to you dressed as a bum, and she says that she represents a Wall Street firm, then is it reasonable, AJ, to believe that this bum represents a Wall Street firm?
Maybe not.
Let the record reflect that she said maybe not. We're going to edit that out and take out the maybe. But on the other hand, AJ, if she's appropriately dressed, and if you have seen her in the offices of the firm before, then it would be reasonable to assume, and maybe Kelsey, you were there as a client, but you don't know that. And you see her walking into a partner's office, and it's like, oh, that's her office. Therefore, your reliance in that case would be reasonable, maybe. We got the maybe in there. Okay. Rights of the partners. To management equal, each one has a vote, unless, Megan, the partnership says otherwise. Majority wins. Unanimous consent for some actions. What sort of actions do you think, Linda, we would need unanimous consent for?
If you're changing the capital accounts.
Maybe if you added a new partner. Maybe if you are going to take out a mortgage. Maybe if you're going to spend $1 million on new equipment. So anything that is unusual. Interest in the partnership, equal profits. And this is what Megan said earlier. If the partnership agreement does not tell you how to split profits, you split them equally. If the partnership agreement, Kelsey, does not tell you how to split tells you how to split profits but not losses,
Split losses the same.
then you split losses the same way that you do profits. 2 questions. Sydney, number 1, does that assumption make sense? Number 2, Sydney, as a practical matter, do you think it's often the case that we would make a decision about how to split profits and not a decision about how to split losses? You don't think that's the case? I think that's more common than you would think, because Brandon, when you go into a business together with, say, Matt, do you expect to lose money?
No.
So I think it's probably more common than you would think. But Cindy, is that something we should think about?
Yes.
Right, so partners' compensation, you do not have a right to share in profits, but you don't have a right to be paid. Now, Michael, could the partnership agreement overcome that? Yes. Inspection of the books, always, and also by representative of the deceased partner. So, see, Kelsey, you're in business, partnership with Keith Harrison, he dies. His representative has a right to look, he has a right to look at the books, and so does his representative. Matt, when you were in partnership with Linda, where you put in $99,000, she put in $1,000, Linda, I assume you would be the one running the business on the day-to-day activities. Therefore, Brandon, Matt, one of the things you would want to be able to do is to inspect her books to make sure she's doing things appropriately. Accounting when there's a fraud, embezzlement, wrongful exclusion, or if it's just and reasonable. To make an accounting of the profits. Rights of the partners. Property rights acquired by the partnership remains partnership property. An individual has no right to sell, mortgage, or transfer partnership property. So Linda, that's to say that you as an individual have no right to do that. You acting in your capacity as a partner do if you've got authority. And how would we know if you've got authority? By the partnership agreement. Each partner can use or possess property on behalf of the partnership, assign her right, her share of the profit to another for whatever reason she chooses. Duties and liabilities of the partners. Fiduciary duties, partners are fiduciaries and general agents. So again, we're using that term fiduciary again, Cindy. What does that mean in English? You and Kelsey and Talina in a partnership together, and you have you are each other's agents, but you also have a fiduciary duty, which Talini means what?
Trust and being loyal.
Loyalty, care, safeguarding. You can't put your interest above the interest of the partnership because that would violate your fiduciary duty. So in other words, Talini, you have a duty to be a good person. Duties and liabilities of partners, authority of the partners. The UPA refers to general principles of agency law.